Guys, welcome back to another episode on our Freedom Blog and Real Talk podcast. Today we are here with CJ. He is primarily in our one of our companies, Freedom Capital Investments, which there is an announcement coming on that company in the near future, so keep your eyes and ears open for that one. And then I'm Caitlin, Freedom Real Estate Group, and today we are going to be talking about why is debt a good thing. CJ and I were kind of chatting a little bit before this, and CJ brought up a good point. He's like, there's a lot of negative point of views on debt. So we are here to kind of explain why it's a good thing and then some kind of differences between good debt versus bad debt. So I guess right off the bat, I'll start with an easy question. I actually didn't have this on here, but quick overview, what is debt?
Yeah, so I think I'd be curious to see what the definition is, but I think debt is money that is not yours that you are borrowing, right? So typically you're borrowing that money at a certain interest, right? That you will pay back that original amount plus interest. So that can be in the form of credit cards or utilizing debt, mortgages, car notes, people for any big purchases potentially utilize debt to purchase that and then pay it off over a period of time.
Perfect. Thank you for that. Quick little anecdote. So now having debt, it helps your credit, and it is good for establishing credit, especially if you don't have any to start with. Do you want to elaborate on that at all?
Yeah, so your credit score is made up of a number of different factors, but there are people who will actually take out a loan and then pay it back to boost their credit score, which sounds silly to some, but the whole, your credit score is there to show how responsible you are of a person to handle your financials, right? So showing that you can handle a certain amount of money, paid to you, or lent to you, and then being able to pay that back on a timely basis can actually increase your score because it shows that you're a responsible person to lend to, and then they would want to lend more money to you because you are consistently paying back.
Yeah, absolutely. That kind of ties in with one of my other points is having debt forces you to be financially disciplined. Because, you have to make a plan. You're accepting this much debt or money of some sort, and you are agreeing to pay it back with an additional because of the interest, like you stated at the beginning of this call. So you have to essentially budget a plan to make that work out every month. And it, like you're saying, it shows that you are reliable and that it's just going to boost your credit score up.
Yeah.
Perfect.
And just going around like debt, right? It is good and bad, right? Bad debt is if you are not a responsible person and you are going into debt, and then the interest is just going to be too hard for you to climb back out of, right? But there's a way to be responsible with debt and use it to your advantage to acquire assets or cash producing type things such as rental real estate, which is the business we're in. So you can kind of arbitrage the difference of what you can make versus what percent you have to pay back to make a gain for yourself.
Yeah. So you kind of touched a little bit there on, the good debt versus bad debt. And one of the good debt that you can have is for real estate, have a mortgage or maybe even for renovating different things like that when it's involved real estate. So now what is, explain to me where, if someone were to see, it's cheaper than equity, debt is cheaper than equity. What does that mean?
Yeah. So cheaper, I don't know. What do you mean by equity? You mean by the equity in the home or?
Yeah. Yep. Since we're on this.
Yeah. So the idea there is that, instead of putting 100% down on a property, right, you're going to buy a cash or a house in cash for $100,000. You can actually purchase that property for $25,000 down, and then get a loan of the other additional 75%, where now you control that asset. If that property goes up $25,000 in value, if you with the loan, you've now doubled your money, right? 25K to now 50K in equity. Whereas if you had put 100% down or bought it in full cash, that would only be a 25% return on your money. So the idea there is that if you can get better returns than the interest rate that you are paying, that is an advantageous way to utilize debt. So an example that, I live in our Freedom Capital business. We have a lot of people who may be borrowing from a life insurance policy or a home equity line of credit where they can get a low interest rate, 4 to 6%. And then we are willing to pay them 10% for that money because we need a lot of capital to buy as many houses as we do, to generate profits for the business. So that money is desirable for us to have, but they can make that, 4 to 6% delta, which can accumulate to tens of thousands of dollars through a year.
Yeah.
I don't know if that makes sense.
Yeah, it kind of reminds me of the saying, you have to spend money to make money. So that's exactly
it's just utilizing your equity intelligently or efficiently so that you can get the best return on your capital. Right? There's a lot of ways to deploy it.
Perfect. So now a lot of with debt, interest is tax deductible, correct? How does that work, and how is that even a real thing?
Yeah, so the government, there's a lot of different write-offs when it comes to real estate, and the idea there is, some people feel like they may be cheating the system or something, but the government is encouraging us to utilize funds and invest funds because it creates more jobs, it creates more work, and it stimulates the economy. So they provide various incentives for you to be making those investments into rental real estate or into real estate because it's going to generate all the different jobs and transactions that will stimulate the economy.
Perfect. I myself did not really know that one, so I learned that one. So kind of going back to good debt versus bad debt. What are we already talked about real estate. What are some other examples of good debt?
Yeah. Well, I'd like to say bad debt, right? Bad debt is people who are throwing money or taking out, maybe credit card debt that is really high interest on items that maybe aren't totally necessary, right? So people who are putting large home purchases like couches or whatever that is, things that they might not be able to pay off the next month, that's bad debt because you're going to be paying 15 to 25% interest on something that is not helping you financially. Good debt is typically looked at as anything that is going to get you're taking out this debt to receive a higher return, whether that's 1 month from now or a year from now or years down the road. So a lot of people will take that out, if they're starting businesses, right? Maybe they need materials. So they will buy those materials with debt. But then once they sell all those products, they're going to have more than enough to pay off that debt, but also have a return at the end of the, at the end of the month or the end of the year. So anything that is utilizing to fund and fuel a cash producing business is typically termed as good debt, whether that's real estate or any type of business.
Okay, gotcha. So I want to bounce back a little bit because you brought up a point that reminded me of a story that happened personally. You were talking about credit cards and, they usually have high interest rates on them. Specifically, so this was a few years ago. My partner and I, we were at a department store. I'm not going to say what store, but, they really push you to, get their credit cards. Oh, do you want to sign up for our credit card? You can save 10% off or something like that. Well, at this point in time, they were offering 0% interest for the first year. And like, okay, that sounds great. 0% interest. So you literally are just paying whatever you put on. So we were like, let's look into this. So we looked into it. We got the packet. The interest rate after the first year was 25%. I was just like mind blown by that. I could not believe it was that high. And my partner, he did end up getting it.
And again, and that's great, right? If you are going to utilize, and that's when I go back to like responsibility. If you're trying to arbitrage and you can purchase an item and not have to pay it off for a year, and that's an item that you either want or need, and it's going to help you, that is an efficient way to do it. But again, credit card companies are banking on a non-responsible lender who is going to get to that year mark and not be able to pay it off. And then they're going to get that 25% interest, right? So credit cards are a phenomenal thing for people who are responsible and pay it off at the end of the month, right? Because they're earning anywhere from 1% to 3% on cash back, depending on what credit card and program. And also a lot of those credit card programs have a huge sign-up bonus at the beginning or an introductory offer, like you mentioned, so that they can entice you to come in, right? Because it's an acquisition cost. But if used efficiently, you can get a lot of free points or value in the terms of dollars from opening. I was in the credit card game. I had 15 credit cards at one point, and I was, opening and closing. And I have a great credit score because I have a lower credit utilization and I have a higher credit limit. But I've always paid off that, credit card at the end of the month with AutoPay.
Yep, that was exactly what he did. He didn't have any credit. And again, this was several years ago. So he didn't have really any credit. So he was like, I have the money. I can pay this off. Like I can go pay for this regularly, but I want to do this, build my credit. He's like, and I'll let it sit on my account 30 days and I'll pay it when it's due. And that was what he did. And he did that for the first year. So he took advantage of that 0% interest and built his credit up, and his credit is the same. It's phenomenal. He does still have the credit card. He doesn't use it as much anymore just because he's already done what he's needed to do. But you said something too, a lot of credit card companies or something, they will have a lot like a rewards program, or might not have the correct terms, but like they will have like cash back offers and things like that. So, all that sounds great, but if you're like going to do that route, do your due diligence on it and check it. We would have not have known that there was going to be a 25% interest on it if we wouldn't have read the fine print and looked at everything. And I'm glad that we did. So just wanted to add that little snippet in there. But it also, with, having debt and building your debt and building your credit, we talked about this a little bit. It builds your credibility. Like you said, it shows that you are financially responsible, and they're just going to keep hiring your credit limit and your availability on that. Do you have
which thus creates a better credit score for you because your credit utilization will continue to decrease, which is another factor, right? Because for the purposes of this, right? If I lent you $5 and paid, said, hey, I'll pay you back at the end of the week, you probably would be, willing to do that, right? But if I wanted to get a credit limit, say, hey, can I have $1,000? I'll pay you back at the end of the week. You're going to be a little more timid. But if I'm typically only borrowing a very small amount of what my limit is, it shows more, less risk of me defaulting and not paying you back.
Yeah, that was a great example. Thank you for that. That was great. So now, how does this? So we've talked about how it increases your credibility, it increases your credit score. What about your net worth? How does that factor into that?
For debt?
Yes.
Yeah. So, an example I'd like to, bring in is, 2 years ago, I purchased a rental property. It was $100,000. and I put $25,000 down, 25% down, because it was an investment property. And through the last 2 years, as you know, the market has increased significantly. And this property that I, bought for 100K, I put a couple $1,000s into some minor fixes, paint, some flooring, is now probably worth $150,000. Now, why this debt comes into play is I only had to put 25% or $25,000 down to control all of the upside or downside if you look at it that way. But now I have $75,000 in equity in the home, and that is, a 200% return on my money, right? Like over the course of 2 years. Had I bought that all cash, 100K, that would have only been a 50% return on my money, which is still, still great, right? But when you start being able to do this at scale, it just shows the power of leverage and utilizing debt to kind of acquire assets that, can hopefully grow in value or appreciate.
Yeah, absolutely. And that's one of the great things, specifically with the real estate industry. And, if you have a mortgage or whatnot, your property value is more than likely going to increase. Usually, appreciation is very real. We've seen it, especially the past 2 years, like you said. So that's just going to continue to rise.
Right. And, that's why, there are all these multi-millionaires, right, who could buy things for cash, but they still, buy their house cash, but they still choose to get a loan on it. And why is that? Because if they can get a loan for 4%, now closer to 6%, they're, betting, or they know that they can get a higher return on their capital somewhere else, right? So it makes more sense if they can take that money and go make 15% with it. Why would they sink it into something that, where they can borrow that money for 6%? So it's that whole idea of arbitrage in what you're kind of purchasing.
Yeah, I saw this thing a while ago. It's probably been a couple months, and it said that most millionaires and billionaires have debt. And the headline was something catchy, like trying to make it sound like it was like a negative thing. Yeah. And then once you got into the body and was reading everything, it was quite literally the opposite. They have debt. They are millionaires and billionaires because they have debt, because they have created that wealth and equity for them.
Yeah, totally agree. And debt has allowed me to accelerate my net worth as well, right? Through property acquisition or just playing that arbitrage and being able to get higher returns somewhere else with a line of credit.
Perfect. That's amazing. See, debt, there's a lot, like I said at the beginning of the call, there's a lot of negative feelings towards debt, but debt doesn't always have to be a bad thing if you are financially responsible and disciplined enough to,
and just literate too, right? People have to be financially literate to understand how to assess different opportunities and risks. And, that's a huge thing. It's what I'm really passionate about is, spreading financial literacy and making sure people are understanding, the impacts of the decisions they make from a financial perspective.
Yeah, definitely. And you have to start somewhere. You learn from your mistakes, or you start by doing research and listening to podcasts or blog episodes like this one, or you're reading blogs or going to webinars. There's all kinds of different things, talking to an investor, another investor, or a bank, someone who knows and who can help teach you and kind of go along your way.
Yeah, and it's never been easier to learn, like you said, going on YouTube or Instagram. Now, you're going to get intros, but and then going to learn the concepts, and then you can always talk with a financial advisor or someone, in your network that could assist. Yeah, absolutely.
So that kind of ties into, you start somewhere, but this debt essentially helps you reach goals. So kind of in a nutshell, that's what we were all getting at is, because of debt, you were able to purchase that property that you were just talking about, that $100,000 property that you put 25% down on. I don't know where that is currently, but I'm assuming you have been able to accomplish the goal that you set for that and make new goals from that.
Yeah, certainly. I think it just gave me the confidence to continue this model of, rental property investing, which is, at the core of what we do here for Freedom, assisting others kind of to purchase properties. And it's nice to be able to say, hey, I'm doing exactly what you're wanting to do, right? And here are some of the successes that I've had, because I think a lot of people need to see it to believe it, from someone they're actually talking to and say, this is real, right? Versus just what I've watched online for, in some sort of forum, whether that's Instagram or YouTube, or read a book, seeing people who have actually done it in person or in real examples. It's a huge thing. It's a huge thing. And I would say, the large majority of our investors that we work with are utilizing debt, right? They are wanting to put 25% down on a investment property and then leverage a bank mortgage note for the remainder 75%, because they understand the power of leverage and debt.
Yeah. Even if it's something like maybe it's not real estate, maybe it's, just in general, a business loan. Again, that goes back to you have to spend money to make money. That is something that is going to help you accomplish your goal. You have, I would hope, a financial plan to, pay off that debt and everything. So it's going to help, but also student loans too. Something that I did when I was in college, I paid my interest while I was actively taking classes and everything. And that helped me be able to have a lesser amount once I graduated, and it helped me pay off my student loans off faster.
Yeah. And I think what I've really come to realize with personal finance is people like to think it's all numbers, right? Like it is all here's the better return, and I really have found that it is completely emotional. People, when you say that, right? I know people who have student loans at 3%, and they're like, I'm going to get a better return in the market at 10%. So I'm just going to make the minimum payments on my student loans and start accumulating wealth within the stock market by getting a better return. And maybe that's true, but there's also people who feel really good with not, having that outstanding debt of student loans and want to kind of get that to zero and then start growing wealth, right? So there's not a right way. It really comes down to personal preference. I don't know. It's just been an interesting thing. People like to think it's all numbers, but it really is emotion and how we tie our emotions to certain financial situations, which is pretty interesting.
Yeah, definitely. And not everyone has the same goal either. For me personally, I was kind of the second option where, I wanted to get my student loans paid off. So for me, it was kind of just burning in the back of my head, because at first, when I was in college, I was not as knowledgeable as I am now. And I was like, oh my gosh, this is debt. This is terrible. So I just wanted to pay it off and not have to bat an eye towards it ever again. But then, so I could focus on other things. So that was what I did. But it's also, again, not necessarily a bad thing, because you're building your credit with it.
Yeah. And the reason ultimately you took out that student loan debt was to hopefully attain a position that is going to yield you a higher return, right?
Yep.
Than what you are borrowing that money at eventually, right? It may take a couple years, but all debt, right? And that's still a smart financial decision, right? Because you're hopefully increasing your overall income eventually, whether it's in year one or, years down the road.
Mm-hmm. Yeah, absolutely. And that all goes back to, different goals and different end games of everything. So perfect. The last thing that I had is debt lending, which that's essentially, what Freedom Capital is doing. Do you care to elaborate and explain what exactly that means?
Yeah, I'd love to. So We do a multitude of types of lending here with Freedom Capital. So, at our core, we are a investment turnkey business, and because we are buying 100 homes a year, we utilize debt or private money to buy those properties because we need that cash position to basically buy all these homes, and with the goal to eventually sell them at a higher price and make that spread or profit from them. So we pay anywhere from 6 to 12% for money to basically be borrowed. We borrow that money and then pay it back 6 months to a year. Or we also have a debt fund that is a longer term, way to earn interest on your money for a lot of people who, just don't need that money next year, or they have it in a self-directed IRA, a tax advantage account that they know they won't need for years down the road. And then we also do, utilize debt or other funds from other individuals, including our own, to go buy large apartment complexes where typically there's a value add component. So, maybe it is we're buying, for easy numbers, we need to raise, $250,000 to buy $1 million property. So we're going to borrow funds from individuals. We're going to pay them a certain interest rate, or maybe they'll get a certain equity position. And then we will put $200,000 into the project to increase the value. And then we are able to sell it for $1.5 million down the road, something like that. So it allows us to basically leverage debt for the debt we're taking out from the bank and also from our lenders to grow both of our wealth and interest when we sell that asset at a later date.
Okay, great. So I guess, okay, so why go this route instead of trying to go through a traditional bank?
Yeah, that's a great question. So for our single family homes that we are purchasing, it comes down to two things, really. Time, right? So we're able to raise money and close on a property maybe in 7 days, whereas a bank can take 30 to 45 days. So it's just speed. But another thing is for some of our properties that we're purchasing originally, we're typically getting them at a great discount. And that's because maybe there's a lot of deferred maintenance. They've been vacant for a while and there's problems with the house. Maybe there was a fire, or there was a leaking roof, right? Certain things that when a bank wants to lend on that during the inspection phase, they may not want to lend on it because it's termed risky. So that's a reason that we need to utilize private funds to go in, make the fixes necessary, and then, get it appraised at a much higher value down the road.
Yeah, that makes a lot of sense. I've heard that before, about banks being a little more hesitant whenever lending on usually a real estate project that needs a lot of work, and it can be a high risk for them.
Right. And they're just trying to, protect themselves because they don't want people to default on the loans that they are giving out. So they just may choose not to lend on those certain scenarios.
Definitely. Well, that is all that I have. This was great. I hope this helps at least one person kind of change their mind on why debt can be a good thing, and it's not necessarily always a bad thing. So that's all that I have. Did you want to add anything else that maybe we didn't talk on?
No, I think you hit on it great. I hope this inspires someone to do more research on, personal finance. And again, if you guys have any questions and how we can help you utilize debt, or make a return on the capital you may have, whether that's a HELOC or self-directed IRA or your own funds, we'd love to have that conversation. So please do reach out, and we'd love to help.
Yes, absolutely. Well, CJ, I appreciate you joining this call. I know you are very busy, so you are very knowledgeable on everything financial. So again, I appreciate it.
Yeah, of course.
Like you said, if you guys have any questions or anything, don't be afraid to pick up the call or pick up the phone to call us or leave a message or comment below. Email us. We'd be more than happy to help. We always like to end these with invest smart.
Live happy, you guys. Thank you.
Bye, guys.
Bye.
Nothing on this show should be considered specific personal or professional advice. Please consult an appropriate tax, legal, real estate, financial, or business professional for individualized advice. Opinions and information on this show are not guaranteed. All investment strategies have the potential for profit or loss.